everyone. 2021 has clearly been a year of tech IPOs, many DRHPs filed and many in the pipeline. I'm Radhika Das and you're watching the Daily Dispatch. The companies in news today are Dunzo, Farmeasy and Delivery. Our first story today, Google-backed delivery app Dunzo clocked almost 600 crore rupees in revenues in FY21. Dunzo currently operates in 8 cities and is looking to expand to 20 more cities by 2023. At present, Dunzo caters to over 2 million orders on a monthly basis and reported a GMV of $200 million in FY20. Our second story today, reports suggest that PharmEasy, which is an online pharmacy platform, is preparing to file its draft papers this October. The company is still finalizing the fundraise amount. It is negotiating for a fundraise between $200 to $300 million at a valuation of $5.6 billion. In the past few months, the company raised over $650 million from investors such as Prosus, B Capital, and TPG. Our third story today, one more IPO on the radar. Logistics player Delivery is planning to file its DRHP by October. The company is backed by SoftBank Vision Fund and will be looking to go public in March 2022. Earlier this week, Delivery acquired Bengaluru-based Put-on Logistics for an undisclosed amount to better its B2B logistics offerings.
All right, then moving on to our second segment, I have with me someone who's been in news for a 1,600 crore IPO filing that they've done recently. I have with me Aloke Bajpai from ixigo. Thank you very much, Aloke, for joining us today on the Daily Dispatch. I want to begin by asking you about the series of activities that are happening at ixigo. One big activity, of course, is the filing of the DRHP for 1,600 crore rupees. Tell us about why you thought this was the right time to go public.
Well, I think, look, we've been through a very roller coaster patch in the last 18 months, right? At the beginning of COVID, with the lockdowns, we went to almost zero revenue. But I think because of our focus on domestic and specifically around our next billion user strategy, we managed to come back strong, by the end of the year as things started normalize. And we not only turned profitable in FY21, but we also managed to tuck in, an acquisition, of Confirmed Ticket. So towards the end of the year, we were looking at a scenario where travel was still not back to pre-COVID times. There was still a lot of room for the overall industry to bounce back and grow back to normalcy. But at the same time, as a company, we seem to have weathered the storm relatively well. And that gave us the confidence that, the best was still ahead of us and there could be a lot of more room for growth. And given we were profitable, we had sort of kept that as a benchmark in our head, saying, we need to hit that milestone before we think of what next. And there was kind of unanimity that this is a company that we've spent 15 years building and we don't mind spending several more decades, growing and turning into institutions that can last generations. So to that extent, an IPO would have been the best outcome for us. And that's why we have filed, and we are obviously at this point waiting for SEBI approval before the next steps.
Alok, this DRHP filing comes at a very interesting time, because you already have a company in the same space, Ease My Trip, which has gone public. So you've been seeing the kind of response that investors have given a company in the travel tech space. So tell us a little bit about how you see this. Was this perhaps an indication in terms of how your IPO perhaps will be received by investors?
Well, I think it was indeed encouraging to see that the Indian public markets had a good reception to that particular IPO, and also the fact that when you look at Zomato and some of the other tech IPOs that have happened in the last 6 to 12 months, they've been received very well by the market. And I think even though in hindsight, it may look like that was one of the considerations, but for us, it's really more to do with, our focus on building a company with the right fundamentals, and the fact that we think that a capital efficient story that has the ability to continue growing for decades to come, given that we are kind of targeting the next billion user story where for them, leisure travel hasn't even started, right? When we're talking about tier 2, tier 3, tier 4 markets, where ixigo is actually more dominant. I mean, in those markets, leisure spend is still very low, and even when COVID goes away, I think there is immense room and upside for growth. So for us, I think more than the market overall and the reception, it was really about our own belief in ourselves, saying this is the right step for the company and for our future shareholders, who get to hold a piece of the next billion user story.
Right. Alok, I also want to talk to you about the whole travel industry and the scenario out there, from zero revenue last year to people, starting to move and go to different locations now with things opening up. Do you think that the worst is behind us in terms of the travel tech space?
Well, we hope that the worst is behind us for sure. Of course, we've seen 2 waves of COVID, and the first wave obviously was worse because all travel was brought to a standstill. The second wave, though, had a huge human toll to it, and impacted all companies and their employees tremendously. But I think we are seeing very, at least the last 3 months, the industry is actually bouncing back very well. And many of the verticals are now approaching levels where they were last at in February, or March, right? And I think there is optimism, at least among the travel industry, that things should look up from here. However, I would just like to add a caveat that vaccination is going to be the key element that will create comfort in the minds of travelers who want to go out, because we still, when we speak to our customers or travelers, we get a sense that there is still a segment, especially the ones with families or young kids, or that's hesitant to step out. And for them, the key element will be, have we vaccinated enough people in our country, right? And even though we've now achieved almost 10% double vaccination, I think closer to a 50% threshold is when we expect travel to start, the real revenge travel to start, so to say. Because at this point, most travel that is still going on is essential travel. We have a trickle of leisure starting to happen last couple of months again. Some of the popular destinations are starting to see some properties fill up. But I think a large majority of travel today is still essential travel, utility travel, and meeting friends and family kind of travel, not really in a big way leisure travel yet. And of course, international is still shut largely. There's very few countries that are open. And so, the full potential of that, we don't expect to realize at least this year.
Right. Alok, I want to talk to you about the pillars of growth. You've made some acquisitions over the last couple of months. Abhibas was one acquisition, Confirm Ticket, as you mentioned earlier. What is going to be the 3 pillars of growth in terms of importance for you at ixigo? Will acquisitions continue to play a very important role in shaping the future for ixigo going forward?
So if you look at both these acquisitions, Confirm Ticket and Abhibas, first of all, stellar teams, very committed set of founders, who had been pretty similar to us, extremely capital efficient in how they've built their companies, and managed to turn their companies profitable despite COVID, and immense scope for growth in the next billion user space, or the tier 2, tier 3, 4 markets. And I think that fit very, very well with our strategy, which was to go after emerging travelers, to go after those travelers that may have never stepped inside an airport before, and might be booking the first flight of their life, or might be making their first train transaction online. And when we look at that market, we looked at companies that were, in their mission and values, dedicated to that space, and also fit in culturally with, how we were looking at building our company and growth, right? So So that's how it made sense for us. And I think going forward, we will continue to look at assets and opportunities in the next billion user space, and teams that want to create more value for the travelers who are just coming into the ecosystem, who have just learned how to search and book online, and who've just maybe set up their first payment or UPI. I think we love to see and meet such companies and teams time to time.
Right, Alok, a final question before I let you go in terms of your future targets and the kind of strategy that you have going forward. If you can give us some color in terms of what ixigo's plans are for the future.
Yeah, I think given we are on the road to go public, we can't make very detailed future forward-looking statements. But as you can see in our prospectus, we are looking at organic and inorganic growth opportunities. When we say organic growth opportunities, we're looking at enhancing monetization from our existing verticals, adding more ancillaries. Like for example, if you look at our flight business, there is still a lot of scope to sell more ancillaries such as seat and meal and baggage and other such services that airline travelers need. And similarly on the train side of our business, we look at what ancillaries make sense. And when we say inorganic, we would continue exploring opportunities where we could either partner strategically with service providers who are complementary to our flight, train, and bus offering, or look at potential investments, acquisitions that can add more value to bring new verticals to our story. So we look at all that in the future.
All right, Alok, on that note, we wish you all the very best for your IPO and plans going forward. Thank you very much for being a part of the Daily Dispatch.
With that, it's a wrap for today. We'll see you again with more updates next week.